Hello and welcome to traders and investors. I'm glad to present to you the daily market review prepared by analysts and experts from fx.cu portal. Here we go. Today is April 13 and we're starting from euro-dollar pair with Jakub Novak. It's obvious that the numbers of the consumer price index and core inflation impressed traders, which is why there was an upward trend in euro. Falling US inflation means that the Fed no longer needs to raise interest rates. Accordingly, the central bank could begin lowering them, which will allow more active pumping of money into the economy. However, doing so will reduce the strength of dollar in the market. Today's CPI data from Germany is expected, followed by a report on industrial production in the Eurozone. The former is likely to demonstrate growth, while the latter will show some recovery, which will positively affect the euro. In the afternoon, there are important data from the US, the number of initial jobless claims, and the producer price index. Both may weaken dollar's position, leading to another surge of euro upwards. Long positions buy euro when the quote reached 1.0998 and take profit at the price of 1.1042. Growth will occur if the upcoming Eurozone statistics exceed expectations. However, before buying, traders should make sure that the MACD line is above zero, or is starting to rise from it. Euro can also be bought at 1.0966. But the MACD line should be in the oversold area, as only by that will the market reverse to 1.0998 and 1.1042. For short positions, sell euro when the quote reaches 1.0966 and take profit at the price of 1.0923. Pressure is likely to return this morning, but it will only cause of a small correction. Even so, traders should make sure that before selling, the MACD line is under zero, or is starting to move down from it. Euro can also be sold at 1.0998. However, the MACD line should be in the overbought area this time, as only by that will the market reverse to 1.0966 and 1.0923. More information about euro-dollar pair with area of Markmore. Currently, on the daily chart, the euro-dollar pair appears to be stuck in its bearish rejection block. And there are also signs of weakening volatility from the upward rally movement to test and touch the upper Bollinger Band level. And at the same time, the stochastic oscillator indicator is already at the overbought level. As long as there is no movement back to its initial bias, which exceeds the 1.1033, then euro-dollar pair has the potential to fall down and test the 1.0838 level. How to trade the next major pound-dollar pair, Sebastian Siliger reports. The pound-dollar pair has bounced from the level of 1.2343. Then the bulls, broken above the short-term trend line dynamic resistance, around the level of 1.2455 and are currently approaching the last swing high seen at the level of 1.2524. The intraday technical support is seen at the level of 1.2387 and the technical resistance is located at 1.2524. The momentum on H4 timeframe chart breaks into the positive zone. So the short-term trend outlook to GBP remains bullish, and thus the level of 1.2343 is clearly violated. Gold, sweet gold. Trading plan for this commodity asset is presented by Dimitris Tsepos. Gold is trading around 2017.10 at the opening of the European session today. The pair is located above the 21 SMA and 200 EMA on the 1-hour chart. Yesterday, during the American session, gold showed a strong upward movement reaching 2028.33, and a technical correction occurred. The price then reached a low of 2001.39. Now we can expect an upward continuation in the next few hours to +8 Murray level located at 2031. Gold left a gap on April 5 and is likely to cover it before making a change in the trend. Risk appetite and falling treasury yields are supporting gold's strength. Gold points to the maximum of 2031 +1.8 Murray level for the next few days. A technical correction towards the 21 SMA, located at 2013, is expected in the next few hours. The daily pivot point is located around this area, and as long as the pair trades above this level, we could expect it to continue rising. Finally, a technical bounce at the bottom of the uptrend channel around 2007 could give us an opportunity to buy gold with a target at 2031. In the event of the breakout through the uptrend channel formed since April 10 and a daily close below 2004, we could expect gold to fall towards the 200 EMA, located at 1996. It could be a sign of the trend reversal. The price could fall towards 78 Murray, located at 1968 in the next few days. Our trading plan is to buy gold while it trades within the uptrend channel, with targets at 2025 and 2031. The Eagle indicator is given a positive signal, which supports our bullish strategy. And finally, here's Lowry Bailey with USD JPY pair focused. Let's have a look. The USD JPY pair almost reached the target level of 134.25. And yesterday, it fell by 52 points under the general weakening of the US dollar following the release of the US inflation report. The signal line of the Marlin oscillator moves along the zero line, not daring to cross into the area of the downtrend. a repeated attempt to break through 134.25 will probably follow, which will open the way to the 1.35.40 target, the high of July 14, 2022. On the 4-hour chart, a deeper correction is also possible, driven by the divergence between the price movement and the Marlin oscillator. In case it crosses the MACD line downwards, below 132.76 mark, the price may continue to fall to the support level of April 10, 132.00. Regardless of whether the price chooses a deep correction or not, we still have growth as the main scenario. To change it, the price needs to fall below the MACD line on the daily chart, below the low of April 5 at 130.65. That's all for today. See you soon online. Good luck.